Hello, everyone, and welcome to Fairfield County SCORE's webinar, Unlocking New Financing, Crowdfunding, Rewards, Revenue, Purpose-Based Funding. I'm Tim Ryan, a business mentor here at Fairfield County SCORE, and I'll be your host. Our speaker today is Bill Schloth. More on Bill in just a minute. First, let me share some info on SCORE with you. SCORE is funded by a grant from the Small Business Administration. All our services are completely free of charge. There are about 300 SCORE offices in the US with over 10,000 volunteers. Fairfield County SCORE is one of the largest and highest rated chapters in the nation with over 100 volunteers comprising a wide range of experience. We offer 3 value-added services to small businesses, which are accessible from our website at fairfieldcountyscore.org. fairfieldcounty.score.org. First, we provide free one-on-one counseling. Second, we produce over 100 educational workshops and webinars each year. And third, we have extensive resources and tools on our website, including templates to help you build your business plan. So let's get started. If you have any questions during the webinar, please use the chat box located in the lower part of your screen. To respect your time, our webinar will end promptly at 1 o'clock, and recording will be available on our website within the next couple of days. Now to our speaker. Bill Schloth has been investing in, managing, buying and selling startups and emerging businesses for over 25 years. He is an executive director and founding member of Crowdfunding Global Alliance Inc, a nonprofit organization dedicated to providing education and advocacy for crowdfunding. Mr. Schloth is a CPA and has an MBA in marketing from New York University. Welcome, Bill. It's all yours.
Thanks, Tim. Appreciate that. And it's a pleasure to be here with you all today. I have a great profile picture, but I couldn't find it. So I have my picture on the screen here, and I just wanted to I'll start moving into the presentation. It's great to be here. As Tim said, I'm a CPA and been working with small businesses for 30 years. So let's dive in because this is an exciting new area. So often I like to start my presentations with this famous thing people look up online. They say, hey, why do businesses, startups fail? I hate to say it sounds negative at the beginning. I simply take that out of the equation and ask the question, top challenges we need to address as entrepreneurs. And the first challenge I always like to bring out as part of other workshops I give is your product. You develop something that the market really isn't in need of as much as you thought. The second reason that they fail is because they run out of money. That's really just a challenge. I bring those two up because today there's a number of other ones we talk about, but today we're going to jump into that running out of cash and really avoiding it based on some new exciting financing. I've spent most of my career helping companies get financing, and a lot of new techniques have come through. But again, the running out of cash relates directly to that market need for what you're doing or product you're providing. So they correlate together. We'll touch base on that when I get a little further into this. Take a brief visit through the traditional sources of financing versus the newer types of financing I'm going to talk about. But when you talk about traditional sources, you're generally speaking about approaches that are more investor return driven, frankly, than business plan alignment. They're looking for money. They're not as active with the business. How much they support you, sure, they have backing. But I wanted to mention this word, sounds, just to make sure we have a brief understanding. Dilution, the word dilution, simply means if you were to sell or raise some money for your company, what you as an owner might have to give up as part ownership in your company. I just want to mention that word because these sources we'll talk about highlight why the new ones that are surfacing, the less dilution you have as an owner, the better. Obviously, that keeps you in control. So I just want to explain dilution a little bit. Traditional sources, what you mostly find, especially in the startup mode, was they are quite dilutive, meaning that someone wants a pretty good chunk of your company and they want to gather more control as well. I'm not saying they're the wrong sources. They're very powerful. They've been used for a long time. And those fall into 4 categories. And you may have heard them, but we'll just hit them. Friends and family, it's just that. They're people that are behind you, not as sophisticated. You step down to the angel community. Those are individuals on their own, want to get into some startups. You've probably heard about the venture capital world, VC. And then you'll generally enter a larger institution, which is private equity. But remember that dilution is important, and how much do those groups maybe align or are willing to push your business plan along with you. Now, non-dilutive sources in the traditional world, I put in there, they generally have some tighter strings, meaning they need personal guarantees, they need you to have some assets. Those two fall into really the banks and credit unions. But I also want to point out the pre-COVID governmental private institution world obviously has resources for you. And you're going to see, I'm going to switch to post-COVID in the next slide, because pre-COVID, the government has a lot of opportunity, but I see, and we are using a lot of other expanded opportunities because, unfortunately, of COVID. Moving to new sources. These new sources of capital really have evolved, as it says, it has been driven by the demand of companies to find better investor alignment with the success of their business plans. And we're back to that dilutive word. The key here is being better aligned with your business. We'll talk about how that can happen. But when it's better alignment, less control you have to give up, less dilution ownership you may have to give up as you do something, the better. So here's where they're evolving. And I'm quite excited. I used to live in the older world of traditional. Now what I really advise companies on and help them through is this whole new resources. A lot of you, there's a number of great webinars that are done by SCORE and others. I recommend seeing them. I do one. Crowdfunding is one of the items that surfaces. You may have heard the name. There's 3 non-dilutive types of that. We'll skim over a lot of this because some of it can get fairly deep, but I'll talk about the 3 non-dilutive types of crowdfunding. We'll then move into what's called results-based financing. And what that really, the success of that is, hey, could you get an investor that's actually willing to put their money where their mouth is and get some return based on how much they can help you with the business? Powerful tool and exists. We are using, and we believe a lot of us have seen, even with SCORE and what they've stepped up, and the SBA I had worked with quite often, COVID-driven increases in government support opportunities. It's simply saying there is a lot more, but you need to go look for them, find them, and see how you can get to them. Going to briefly touch on licensing offerings. These are non-dilutive, and that will be something I really love. You offer licenses without giving up some ownership of the company. There's that famous word, crypto. It's confusing, yet my opinion, the blockchain opportunities are here to their last, and they have a lot of benefit, but it's new. So I'm not going to dive too deep into that. The last item I'm going to touch on today is we all forget, I'm a CPA by background, so yes, capital can come in from the outside, but managing your cost structure, and they even have out there now really expense reduction partnerships, that if you manage that and keep expenses down, I know it sounds simple, but people forget that is a source of capital. It doesn't force you to go out. I put this down in the word minimize dilution. And what I mean by that is crowdfunding has a 4th type, and it's equity based. I'm not going to dive into it on this presentation, but the point of these new funding sources, what do? I'm going to show you they're better aligned with your business plan because they're either sharing in your success, they support you already, and that's where we're going. So I wanted to, The audience, it always depends on. I like to rather see them, but we're getting there. Simple equation, math of business success. Your revenue, which is your inflows, creates capital to use. Your costs uses capital, uses money, some money, whether you created it or you borrowed it. And if you can get, quite obviously, the revenue to exceed the costs, you're going to have positive cash flow. That means your business is pushing off money that you could either enjoy as the owner and your rewards, or you could put back into your business. Where we drift, just in simple terms, maybe this is for most, if the costs are greater than revenue, that creates the need for this financing. Now, that can come from an owner or third parties. And we're going to move into more of the third parties now, the owners. I always say to a company, and I'll be cognizant of time, I always say, first thing I say to a company is I need to find money. And I always say to them, you know what, let's just start with something, a budget that just is the minimum you can get. We all like see how much runway we only have personally too, but the minimum you can take so that you can just take it in stages. And this way you can continue to keep control of what you're doing. What's driving the new financing options that are out there? And there's more coming. It costs a lot of, one of the big reasons is, as I mentioned before, is, you know, companies have more leverage than I believe they think. And the amount of investors they have the opportunity to get, and they forget that we can sort of force a little more. In the older days, we probably felt the banks are driving us, and in a way they were. The institutional investors are, you know, just that, but increased demand that is working. The businesses want someone closer. I can't stress this enough. It's fabulous. It's great for small businesses. When I opened up my first business, we were up in the ceiling running lines. It was so hard to sort of open up everything. But nowadays, the technology revolution that is out there has really leveled the playing field. It's almost like I can say us being small business owners can utilize certain software tools and technology to get to the same places that bigger business could otherwise in the past we couldn't afford. So digital tech, more business friendly regulations. I grew up in the world of regulations, and the government has established, crowdfunding is one of the very detailed regulations, has produced business friendly regulations. So a lot of times, sometimes it went the other way, but they now in the crowdfunding area have produced more business friendly regulations. And this, I never saw, I wouldn't have included this. I wish I didn't have to, but challenges associated with COVID has developed a lot of opportunity, because mostly on the government side, but you can find some institutional or support groups. That's the drivers of the financing options we're going to talk about today. I want to give an example. This relates to crowdfunding, and it sort of shows you how digitally, in the past, we wanted to go get money, put our package together. We'll go to the bank. We sit down with them, get in, schedule meetings. It was pretty restrictive. We raised a lot of money from companies and had to do what was called road shows. And those were like, okay, let's go all over Europe, travel. Right now, raising capital through the technique of crowdfunding, but the exact example of this is how much you can do. I'll give one this morning. I received an email. This is from a crowdfunding portal. It talks about a diabetes cure. Now it came in, I'm drinking my coffee. I can see this. I look at it because I have a family member that has diabetes. And it's a fairly simple tool. Crowdfunder is a portal, but it talks a little video they do and traction. Now, the only thing I want to point out here, that came through my computer. That can come through a computer in Asia, England, anywhere you want. You get your fingers touching the world. And I could have, because I looked into this, I could have done two things. I could have actually invested in the company with the press of a button, which is wild versus where we were about 5-6 years ago, because of this crowdfunding and using digital tech. The other thing I could do, which I want you to think about, is I could have purchased the product at a discount. So there's another thing that never would have existed. This particular offering doesn't have it, but we'll talk about it. Companies are now raising money by not giving up equity. They're giving up, hey, we're going to give you first dibs at the first versions. So what I'm trying to emphasize there is things are evolving in the right direction, I believe, because it's gotten tougher and tougher for every business with this COVID. It's unfortunate. I have clients that just can't get their product, and vehicle and costs go up. So let's move into crowdfunding. I do an hour on it, but I'm going to try to just really say this. Crowdfunding simply refers to the idea of raising funds for a project or a cause using digital technology and targeted marketing strategies. Crowdfunding has a lot to do with how you market and use your what you develop for that, simple videos, those items. It's not that expensive. So I don't want to discourage someone saying, wow, time for another seminar or look up some more information. Mentioned that non-dilutive, the types of crowdfunding that are non-dilutive. Remember, you don't give up any ownership in your company. You don't give up any control. No one needs to take a board seat, but these are the three. Rewards-based crowdfunding. Your backers give you money in exchange for a reward. Now, that reward is broad definition. I just said we invested in a particular product. We got an advance and a discounted rate on their products. So that's a way of raising capital that I'm going to drift into one that's very similar, which is called the results-based revenue type financing, but it's not giving away equity. It's giving away some type of reward to the investor. Debt crowdfunding. The word debt, when I mentioned non-dilutive before up in the traditional, was banks. So when you talk about debt, you're generally talking about like how a bank used to lend money. SBA is something similar, it lends in a promissory note and most times does not take a piece of the company. Debt crowdfunding, though, the world of crowdfunding has established, because of the use of technology, huge organizations, not the big banks. These are aggregated individuals across the world that want to borrow and lend capital, and they've just matched them all up. So in general, that area, you can get better terms. It's more flexible to get money, but it's like a bank type approach using technology. Donation-based financing, you see this, it's happening, and you see it at small levels, and it's getting bigger. Donation-based kind is just that, and there's portals that I want to mention. I'll talk to Tim and how we do it. There's obviously behind each of these, we've done some work on identifying a few, items that would show, hey, here's a list of these different types of lending sources, and happy to share that after we finish up. Donators just simply donate amount of money with the feeling of, they've been part of a cause and they believe in exchange for gratitude. The minimized dilution is the fourth type of capital, is this equity crowdfunding. And what that is investors invest a small or large amount of money in a company in exchange for a small piece of the ownership in the company. Those are your crowdfunding types. Go a lot deeper, but there's other resources, you can explore that give a lot of definition. I like to do this because it talks about how you can compare a lot of the financing I'm talking today to traditional. And what it's saying here is crowdfunding versus traditional. Again, this comes from another presentation, but let's just look to the left, bank loans. Middle one, venture capitals, private equity we talked about, and then crowdfunding, or I want to put there / not less dilutive capital. Well, how they look differently. So with collateral, with bank loans, you need it. Collateral means your house, stuff like that. Venture capitalists, they push pretty hard to get some type of personal guarantee from you. Do we want, if something goes wrong, do we want your house? Yeah, they're pretty tough. And then crowdfunding, it's not needing. You're dictating more of the terms, but you're not going to get your money unless your business is something that meets a need. Time required, bank loans, it's gotten tougher and tougher. They're underwriting. fortunately, has gotten tougher and tougher. Venture capital is also, they're quite far. And venture capital is at this point, I could give a long chat on the impact to these organizations. Venture capitalists now have slowed down even having meetings with new companies. They're trying to help their portfolio companies. Crowdfunding, on the other hand, and some of these other sources can be and are, because they're technology driven, easy to sort of fill out apps. I'm not saying you're going to land them all, but it helps you think about your business. They're relatively fast. In a crowdfunding world right now, it's an average 8.2 weeks to get some funding. Hate to say that as a blanket statement. That's after you have passed through their portal and they said go. So there's a bit involved there. I just want to point out how the relationships, when a bank loan, really pretty heavy if we knew someone at the bank, and in the venture capital area, definitely falls into that same area, having to know the right person. In the crowdfunding world, it's really gaining support from many people. Who's behind your cause? How do you get to them? And a lot easier can be a relationship that was established, like this morning with me, with that diabetes potentially cured. That was a relationship that just almost put me right into investor mode and backing it. Success rate. Bank loans, it has become tougher for closing on bank loans. SBA, on the other side though, and all that type of stuff with COVID has freed it up a bit, and has made it easier. They're really trying to stimulate the community. We see it, and it's been powerful. I've been following, except it actually has, now evolved into this newer area where there's less restrictive. You're getting some of this, but you need to know where to look. That's going to be the end. I give the homework, and I'm giving it away already. It's just like, you need to know where to look and find a resource that can help you look for them. And then you just need to execute and go look for yourself. I go over to crowdfunding in terms of success rate. In the crowdfunding world right now, depending on which platform you're on, which means a portal, an online portal, they're accepting, only 7 to 8% of the deals that are actually trying to apply, but the success rate for their funding is 33%, which is quite high for, anybody out there looking. You can see the venture capital world. This was an old stat about probably, or before COVID, even the venture capital world was just really, they only get 0.7% of the deals they even look at. Management control, I mentioned that. Bank loans, no management control. Venture capitalists get a lot. Crowdfunding, no. So I'll flip this right in. What this means down on the bottom is when you do a crowdfunding deal or even explore stuff like that, it's hugely powerful, even if you don't receive money, because you're looking and you're getting feedback from the market. Those two other areas or any other traditional financing doesn't do that. Results-based financing. This is payouts to lenders. The lender, the person giving it, is based on success. I'm not saying it's simple, but that's how the structure is developed. There are two types. Let's call the first one, which different firms have different ways of putting revenue sharing, but it's really called revenue acceleration loans. It's funding to be used for specific sales and marketing efforts. That's all. They don't want, they want to back you. They want to usually, which I'll show you an example if I have time. It's a newer presentation, so I got to watch my time. They usually are part of a partnership where they come in and say the internet, they know something more about it or some technique. They'll also provide you some financing so that you can accelerate the success you're having. The other piece that's, I think, really unique and not as prevalently used, but I'm surprised, is you're finding now sources of financing to acquire some experts. Say you had an expert in the marketing area and you couldn't really afford them, but you really felt good about them. You can now get some sources out there that will lend, again, they might be partnerships, lend to go grab that professional, or I like to say it, get some technology automation. Both of these though have equations. I'll try to do it quick for the revenue acceleration example. This is a revenue. The first column here shows, so this is a company baseline there. It goes back a little bit, but unique visitors to their website, 25,000. They converted 2% of those. Let's call it their average price was $100. So revenue per month was 50,000. what does a revenue acceleration partnership look like? Phase one is the partner, which these are digital marketing companies, the ones we know of. They come in and they say, we can help bring that 2 to 2.5 by what we know. That's tweaks and websites or this or that. And yes, that right there drops to $62,000. So things are looking good as long as their fees aren't more than that. Where this equation really gets good is it says, okay, now that we got that ready to go, the conversion of our visitors has gone up. Let's juice it up with some financing. And then let's both share in the result. And long story short, that was a quick check. It drove more visitors on that top line 37. Same conversion of those people. We're now at 93,000. That was a quick example. And the whole point is you're really aligned because both parties will, phase one, the client won because the partner came in and did their work, but the partner combined with the financing drove revenues even more, and you only paid the partner or the financing source from monies generated. We'll share these links, but I wanted to go back to this because I love the resources. I couldn't identify them all. COVID-driven increases in government. I have a link there, and what this one link is many. I talk about financing ones, and there's experts and tools, score, and more. But this particular link drives you right to an area that continuously is updated. You look on the bottom, you put your zip code, and you get programs right around you. And this is Connecticut area. I grabbed, I think, Fairfield area. Great resource. There's a lot more of them. You just got to go look for them. Initial licensing offerings. This is technology that's used. It's more for a consumer company that is more B2C, business to consumer. But what that is they're selling licensing to sell their product across the world. You do a licensing offering. You actually go out and sell individual licensing. You don't sell equity. You sell licensing opportunities to people. They contribute money. Now they're going to get a return on whatever they bring to the table in terms of their efforts, but they'll also, as the company produces money, get some share in earnings. I'm not going to go deep. I love the area. It's a little bit technical at this point, but there's companies that are usually, here's a modular home company that just did their first successful ILO, it's called, initial licensing offering. That's pretty deep stuff. I'm happy to go at one point, if someone needed some discussion. It's just a new innovative idea that's active right now. The crypto financing, and I don't know when I can't see everybody. I love when I say that word in a presentation, but you'll also see, you'll hear, or some have heard, non-fungible tokens, NFTs. I'm going to try to, the crypto world, what NFTs you're seeing is what they're trying to do with this type of finances. There's a lot of people that we can connect the world of collectibles. It could be horses, art, can be content, what you write, what music you do, that you could otherwise never think, wow, is this worth something? You did a lot of work on those writings or content you created, or music, or again, a horse. With the technology, which again goes back to the blockchain technology, I say cutting edge, to monetize, to sell something. And I'm going to talk 1 minute about brand enhancement. But the one side, and everybody starts rolling their eyes, it is a little crazy. Recently an animated flying cat with a Pop-Tart party sold for 600 grand. I know it just happens because of, again, some people and how their interests have changed. There's CryptoPunks pixels, they're called. They were a while back, but they traded over $400 million. These are pixels of people. So you start going, what scams involved here? I'm not saying it's the wisest place to do things, but this power of this using technology to monetize some stuff, musicians put something up there and see if they can get exposure and backing. Never before could you do it. These are musicians. I have someone in Africa that's a great musician that has finally been able to put, and is getting some notoriety and some money. But I want to move quickly over to this thing's not a fad, because when we talk about this non-fungible token, An example is McDonald's just came out with one. Forget what it was. I think it was the potato chip. They came out with a little token, and really why they came in, McLaren, huge car organization, announced a project that they're building a car, and you're going to have a piece of their brand new Formula One. Down below is this whiskey. I bring this up because what they did, that area, like for McDonald's, they created a token that the world says, oh, great. Oh, no, it was the barbecued chicken mix sandwich or something. I'm going to leave that there, but it's using technology to generate money and build awareness to your firm. I know we're all startups here in general, so it's probably overkill at this point, but we got to keep an eye on it. And I think it is an opportunity. Cost management partnerships, strategies and expense management. I wanted to do this because we might say, oh, isn't a financing seminar? It doesn't happen, I don't think. I don't like that it doesn't happen, but if you manage your costs, and there's methods to get people to help you manage those costs for performance base, it's just, to me, it's just as good as capital. And if you do both, the best. So I tried to say, okay, keep it simple in a way for variable costs. Variable costs of your company are those costs that are needed to directly complete, like a manufacturer widget. There's, people in running those CNC machines. Cost to perform your service, that's variable costs. And in that area, some startups, this is going too deep, but anytime I believe that you can, when you're starting things out, outsource your not your services, but outsource the delivery of some items of that. Because in other words, an employee, for example, versus an independent contractor, if you say you hired me, the cost to have an employee and may include benefits and the taxes related is obviously higher than an independent consultant. Now, when you're ready, though, the goal is to have those loyal employees built, but it's just really important to keep in mind, wow, and outsourcing has become much stronger, a lot because there's a lot of people. That's all my old business did, was really just outsource heavy finance people, because why hire me? It's just too expensive for every day. Below this area, I want you to just know about when you're running a business and you hear about sales tax, you worry about sales tax, you worry about workman comp items, and there's audits, and it gets a little nervous, and you have old receivable collections. I want you to think about that there are services out there to say, you know what? We'll take a look at all your sales tax returns. We'll take a look at the compensation audit, or we'll help you collect receivables, and they're way old maybe for you. You know what? And if we're not successful, you don't have to pay us. Now, yes, they take a chunk, but don't forget that type of stuff, because you start thinking, I don't know anything about sales. I just want to bring that up. I've seen it work. I've seen sales tax compensation audits gets reversed, but there's outfits out there that you could use that it's a viable opportunity to keep your costs down. Give a presentation on this as well. Co-marketing partnerships are becoming more and more prevalent. And I know we thought, where's the financing in this bill? Well, this expense management area is, I think, just as powerful too, because we don't have to give up equity, right? We just got to be smart and find the right technique. Co-marketing partnerships is all happening a lot more and more, and especially that really just means it's called cause-related marketing, is associating somewhat to a nonprofit, a mission. And you both share in the marketing a bit, but you'll both understandably enjoy the benefits of connecting you two. Fixed costs, so we're working down now the P&L, revenues, now we're talking about all the costs. Fixed costs are those costs not directly connected to your revenue. Let's say the insurance, the rents that are pretty much always there. You want to minimize them, but they're not directly producing, the revenue you generate. All I bring up there again is there's very big opportunities. There's no reason at first when you're starting out to hire an accountant, like a full-time accountant. There's so many cheap, reasonably expensed items that you can get an accountant to do them as you need things, a little a la carte. Aggressively shopping insurance, you know what? I have a pretty serious background in the insurance area, and it's unfortunate. You're going to see, and it'll be like, wow, I cannot believe how much insurance is costing me these days. Benefits for health, not alone, for property, for liability. Just keep shopping it, and independently shopping that area is just keep at it. Don't let a year go by without shopping some of your insurance. Even this goes to you personally, guys. It's just keep on it each year, not think, wow, am I out there? You'll be blown away at some insurance companies change their appetite for a landscaper versus a water company. And all of a sudden they're like, wow, that was a great rate. But just my point is, there for your fixed costs, you got to keep aggressively shopping. And aggressively shopping isn't hard. Find an agent that has a network. This is a viable idea, and it's happening more and more now with COVID. Co-working opportunity, co-work, shared resources, space. Look into them. The government and even the local communities have a lot more of that, and it keeps your costs down, which to me means financing. Free business resources, more has popped up. I love doing this stuff with SCORE because, helping out someone like this, I generally get, someone says, well, Bill, that was helpful. We'll see how we're doing. But for all the areas, this is another opportunity that a lot of people on the call on this webinar probably don't realize I just had talked about it. When I opened up my offices, say 20 years ago, or even 10, there wasn't available the software tools that we have now. We were, like I said, running lines through the ceiling, we had to get these whole trading departments set up. Right now, guys, in all these particular areas, which is automation. It can be collaboration software, customer management, finance and accounting, HR. This is a checklist we'll provide, and we have some source for it. All these areas have what's called software as a service programs, and you'll hear about them. They're like, you can buy a customer relationship management system that is just as good as the big guys had with Salesforce and that. I'm not knocking Salesforce, but we can get them now as small business. I have plenty of them that are $100 a month, and you can manage all your customers. I just want you to be aware of that, because don't think a lot can be automated. And when you do that, you avoid the human error, you avoid missing some of your customer service, you avoid hopefully some of the supply chain issues you're having. But my main message there was, no matter if there's a finance discussion at all, I like to point out automation is available to you guys without you having to worry like, my gosh, we have to spend a ton of money and we need Sir the expert. Your next steps is simply, like I said before, I always start this, even though it's a finance, evaluate the market need for your business product. I give a presentation on the Lean Business Canvas. It's a great one-page type tool. There's other tools, but that really where everything has to start. Now is educate what we're doing here. Educate yourself on where to find the resources. We talked about funding. And finally, just take action. I dropped down this, and you can't see all the details, but I'll talk with Tim and see how the best way to handle it is. This is some of the areas, for instance, on the crowdfunding portals. We're not here to recommend one specific. It does just allow us, and it's okay for send outs, what we found sources. Some of it, venture capital now is getting into the business of using these crowdfunding or portal type approaches. I bring this up is you're seeing a lot more equal opportunity funding opportunities. I'm sort of calling it mission focused examples. Crowdfunding portals with more are having a lot of success. People with more minority, Black owned, veteran type things are, you got to find the right portal, but getting targeted is a method of doing it. This is just an example. Again, it says the minority, but I want you to, we'll show we can, you go look for whatever your business is. There's generally do a good search and explore what may be in my industry, and just search the internet. That internet is just powerful. Search, is there a group that is funding lawnmower companies? You'll be blown away. There may be there's certain funds that may want lawnmower type companies. It's just a search, and like I said, educate yourself on where to find this stuff. Tim, I believe that about finishes it for me. So.
Okay. Well, that was a lot of, that was a fire hose of information coming at us.
No.
So we'll use the remaining time to address any questions people might have, or we'll take as many questions as we can before 1 o'clock. We got a lot of time, actually. So the first thing I'd say or ask is, I'm curious about your nonprofit, Crowdfunding Global Alliance Inc. Could you just elaborate where you get your financing and what kind of services you provide? And is there fees if people come to you for information on crowdfunding, I guess?
It's a privately funded nonprofit, and really it's almost like what we give is just coaching sessions, very similar, to the score, a coaching session on how to, approach, and then trusted resource recommendations is what it comes down to in the crowdfunding area. I think I could almost keep it that simple. It's a source to go to. We are trying to develop some rating tools, but we have to be careful of like where may be the best, leader in this particular areas. But it's privately funded, and it's a number of investment bankers that CPAs types is that we give coaching sessions on the crowdfunding. Sort of, unfortunately, named it Crowdfunding Global Alliance Inc, but it started 5 years ago. Now I'd rather change the name to sort of this alternative financing area, but hope that answered the question, Tim.
So do the coaching sessions, do you charge for them then?
Oh, no, they're free. They're free.
Oh, great.
Yeah, it's very similar. And, we have a few workshops we do. No, free. And there's tools up there, I believe, and there's other tools. So thanks for asking that. Yeah, it's free, and it's a chat with myself or someone else and kick some ideas around.
Yeah, I imagine you're going to get a lot of calls now because a lot of the startup people that we talk to, very often they don't realize that it's like 100 days to get say an SBA guaranteed loan. I mean, the SBA doesn't actually provide the money, they guarantee the loan through a bank, and it's 100 days. You have to give them a business plan, financial projections, etc. And very often they don't factor in that 100 days into their financing needs. And I could imagine crowdfunding would be an attractive way for them to go. We do have another question. Can you expand on cause-related marketing? Can that be used by typically low money, non-essential product areas such as art and music, is what's being asked.
Boy, I almost jumped in when you said, just the crowdfunding, this, I could go on forever. It's so powerful. Again, I just want to mention this since we have time. Crowdfunding, or some of this, us even going exploring the revenue financing opportunities, it forces you to sort of just say, okay, let me put together something, simple videos. I know we did it. Let me put together my business and see if it's receptive. A lot of times we sit there and put it together and then wait, like you just said, a business plan, we bring it to the bank, then get beat up and then go on. But this crowdfunding area, even if you tried to get on a portal or saw a site, you start completing out, it gets your deal exposed. I've seen companies try to raise money and all of a sudden they find a partner in Asia that can help distribute their product. So there's one thing. Now, back to the cause related, I got to watch. You got me excited because actually it is the MBA side of me too. The cause related marketing, we have a presentation on, I bet it's somewhere up on the SCORE site. It's available to really anybody. And I'm convinced anybody with a business has two things. Personally, I'm sure you believe in something. But aligning yourself with a nonprofit where you both, yes, do someone small, a lot of the bigger ones will go, hey, why don't we share some of our marketing resources? Meaning, okay, and we'll deploy a program. That's actual dollars. A lot of other ones, quite frankly, even, a crowdfunding global alliance, aligning yourself with something like that, it can work where just being aligned with a mission can help drive business to yourself. So I want to ask, it's not really I don't want to simply say cause related marketing is a very specific term. It's leveraging, you know, two entities, and a nonprofit and a for-profit, those guys really coming together tight and doing a marketing program. I like to ratchet that down a notch and simply say, aligning yourself with a nonprofit, supporting it, getting these days nonprofits have to take a business type approach to things. They know that if you're aligning with them, you're supporting them, they understand you're getting some benefit out of that too. I'm just saying there's it's actually happening. You just need to go after it and not say, oh, how can that non-hopper really help my business? Everybody's getting more business like. So it can apply all the way to me down to just, I'll give an example. I have
yeah, are there businesses that say an artist could discuss a deal with that has an aim of generating funding using NFTs?
Interesting. Well, there's separate crowdfunding portals. I could send whatever that person is. Crowdfunding portals dedicated to musicians or artists. I even think, but the NFT world, I don't want to get off, whoever just asked that is right. The NFT, where monetizing content is something, when we say that, that's a song you have. NFT world there's certain places to go where a musician can monetize his song by trying to create a token. I don't know how I could, maybe a better one offline for a consult because it can get fairly technical, but anyone that just asked about a musician trying to get exposure, an artist trying to get his stuff out there, the internet's the way to do. How you create an NFT, a non-fungible token, I think it's beyond this particular discussion. Try not to avoid it, Tim. It might be better just direct.
Right. Yeah. In fact, someone else has asked for your contact information. I don't know if you had that on a slide, or if you don't have your contact information on a slide, maybe you can type it in the chat window or something for people to jot down.
That would be great. Okay. Yeah. There's a chat window. Can I don't want to kill the presentation here. Can we send that out? Because I should have had it right here. I
think you had referred to the fact that you might work with me to send something to the attendees, but I would just assume that the attendees reached out directly to you for anything like that. So that's probably the best way to do it.
I think so, and it was a fire, but I'm glad someone's digging. So yes, let's figure something out, Tim, and I'll make sure he gets out there, because I put it in the chat, but I don't think I can chat, frankly, from while I'm doing the host. But go ahead. We're getting it 10:48. I'll keep looking. Question and answers. Didn't seem like I can get to my chat screen from here.
Do you have a more at the bottom of your screen, or you don't see the toolbar at all once you're in presentation mode? I guess
presentation mode. I think I'm almost positive I'd have to kill presentation mode.
Okay. That's okay. Let's take another question, and you can I'll have you close out your presentation and you can type it in the chat window. Another question, how can small product-based businesses get started with NFTs, and is it a viable way to raise capital?
Small businesses and NFTs. That one.
You can go ahead and end, and yeah, there you go. And you can probably see your toolbar now and maybe type in the chat window.
Yeah. Okay. Yeah. So small business, I really don't want to, I'm not trying to avoid answering. Small businesses using NFTs, really, I don't know what the business is, because NFTs are really taking a content or a car and raising capital. So the word business versus content has to be separated. So I think that might be better off taking it online, because is it viable? Where I want to get stuck on it, because I want to stay much more non-fungible tokens, or it's up and coming, but I don't like the word business versus a token, which is like a product. I know I'm not sounding probably too helping anyone here. It's
right.
just I don't want to say yes at all, as it's not a viable, or it is a viable for a small business, because I don't know what someone's trying to tokenize. Now I'm really getting good. Yes,
Right.
tokenization is maybe for.
All right. Do you want to type in your, you got the chat window now? You can type in your
Yeah.
contact info. In the meantime, I'll just remind people that SCORE offers free individual mentoring. So please use the, or just visit our website and click on request a mentor. For information about other SCORE webinars and workshops that are coming up, please visit the calendar on our website at fairfieldcounty.score.org. You're going to receive an evaluation via email of today's webinar. We'd appreciate it if you would fill it out for us. Tell us what you liked or didn't like so we can improve our program in the future. I see you typed in thanks.
Yeah, I guess I should. I'm so used to being on. I guess I'm the one speaking, but no.
Oh, there in your Bill Schloth at crowdfunding.
Sorry. Hold it, guys. Sorry, please take Schloth at crowdfunding AI. Sorry, Fred. So crowdfundingai.org, and then we can chat. But obviously, SCORE too. We can line up anything list through SCORE. So I appreciate the time, Tim.
Right. So just a final thought on crowdfunding. Is it here to stay? Is it getting more popular, less popular?
Go search up one of my last. I'm fired up about it. Five years ago, I would have said, you know, as an investment banker, I spent 20 years doing the old-fashioned type money raise. It's here. It surpassed venture capital 2 years ago. It's here to stay. It ends up giving better terms to investors. It isn't for the small guys anymore. The government just raised the regulations to now you can do what's called regulation CF, which is an easier route to crowdfunding, up to $5 million for companies. So it's all I want to give information on these days, Tim. It's powerful for me to say it as a banker because most investment bankers, that's not their world. So you're hitting a lot of buttons.
Very good. So that is the email, Bill Schloth at crowdfundingai.org, nonprofit, of course. And I want to thank you. In closing, big thank you to Bill for presenting today. And everybody else, have a great rest of your day, everybody.
Great. Thanks again. Thanks. And we'll talk to you soon.